Microsoft gained 15.51%. Meta lost 7.95%. The 10-year yield did not rescue either stock with a big drop. It stayed at 4.673%. Same AI boom, same market, opposite verdict. The split tells us the market has moved past paying for AI spending by itself. It is paying for proof that the spending turns into growth, backlog, and cash before costs outrun the business. You cannot see that difference in the Nasdaq. We are going under the index and into the earnings numbers. Then we will use the levels already on the charts to map what would confirm this read and what would prove it wrong. The Nasdaq Composite closed at 25,122.18, up 2.78%. The S&P 500 closed at 7,437.63, up 1.66%. That is a broad risk-on close. Stocks rallied across the major indexes, but the Treasury market did not hand stocks an easy explanation. The 10-year yield closed at 4.673%, only a little below its prior close. If lower rates had powered the rally, we would expect a much cleaner drop in that yield. The biggest moves came from technology stocks. That makes the company results more useful than the index result. The Nasdaq tells us that risk appetite improved. The stock pair tells us what kind of risk investors were willing to own. Microsoft opened at 437.90, reached 458.69, and closed at 451.10, up 15.51%. The stock gave back part of the morning surge, but it held most of the gap into the bell. That close matters because it shows buyers did not treat the earnings reaction as a quick headline spike. The operating numbers explain why. Microsoft reported quarterly revenue of $90 billion, up 18%. Azure grew 43%. Backlog rose 84% to $678 billion. That backlog is contracted business that has not yet been recognized as revenue. Execution risk remains, and investors now have a pipeline they can connect to future sales. AI infrastructure spending is still enormous. Microsoft showed the market a bridge from that spending to current cloud growth and a much larger book of contracted demand. The market could measure the payoff, and buyers rewarded that evidence. The market still has a visible pipeline. Investors can track sales, margins, and cash flow at the next report. The report gives us a way to test the story again. Meta opened at 526, reached 539.88, and closed at 539.03, down 7.95%. The stock recovered well off the opening area, so buyers did contest the initial reaction. They did not erase it. Meta still finished just under an existing chart level that we will use in the map. The business did not miss the growth story. Meta reported revenue of $60.801 billion, up 28%. The problem was the cost of producing that growth. Costs rose 55%, operating income fell 8%, and free cash flow came in at $784 million. Investors now hear AI spending in a different way. Strong revenue says the core advertising machine is working. Faster cost growth and compressed cash flow say more of that strength is being consumed before it reaches owners. Meta can earn a large return on the infrastructure it is building. Thursday's take did not pay in advance for that possibility. The market asked for a clearer near-term conversion from spending to cash. Free cash flow can move with capital spending. That does not settle the long-run value of the strategy. It does raise the burden of proof. When spending rises faster than the cash coming out, investors have to underwrite more execution risk. In a high-yield environment, that uncertainty carries a higher price. The return spread between Microsoft and Meta was 23.46 percentage points. That spread is defining. Both companies are spending heavily on AI. Both reported strong revenue growth. Microsoft reported 43% Azure growth and a larger contracted backlog, while Meta reported faster cost growth and weaker free cash flow. I think the market preferred the evidence it could measure today. Large stocks can move the index even when other stocks fall. A strong contribution from Microsoft can lift the benchmark while the market cuts the valuation of another major company. That is why the pair matters. It shows what investors are willing to pay for. If you only own the index, Thursday felt like a technology rebound. The same move looked very different in each stock. The pair faced the same AI theme and the same market yield. That makes the return spread useful. Interest rates were common to both stocks. Microsoft reported strong cloud growth and a larger backlog, while Meta reported costs rising faster than revenue and weaker operating income. The market reaction lines up with that difference. Now look at this from the other side. Microsoft and Meta both spend heavily on data centers. The difference is what investors can measure today. Microsoft gave them cloud sales and contract backlog. Meta gave them higher costs and lower free cash flow. Microsoft's plan still carries risk over time. Thursday only tells us why the stocks were priced differently after this report. The daily close lets us check the read again. A move through the next level has to hold into the close. That is the part I care about. The macro backdrop raises that hurdle. AP reported that the U.S. economy grew at a 1.5% annual rate in the second quarter. Consumer spending grew 3.2%, while core personal consumption inflation was still 3.3% from a year earlier. The Federal Reserve held rates, and 3 officials dissented in favor of a hike. The macro picture remains a problem. Growth is positive, spending is firm, inflation is still above the Fed's goal, and the long yield remains elevated. At higher rates, the market pays less for future earnings. A company can still spend aggressively, but the market wants evidence that the spending is already producing sales or profit. The market will still pay for results. Sales, margins, and cash flow can offset the higher hurdle. Waiting carries more risk when bond yields are high. That is the hurdle rate. A longer wait for the payoff gives today's yield more time to cut the value of future earnings. Microsoft supplied more of that evidence. Meta supplied more evidence that the bill arrives before the cash payoff. The 10-year yield was 4.67%. That matters. Look at the price action. Microsoft closed at $451.10. Microsoft is below $466.32. The next level is $489.70. The important lower level on the same chart is $398.01. Meta closed at $539.03, just under $540.18. The next level for Meta is $592.68. The lower level for Meta is $520.26. Microsoft has room before the nearest higher level, while Meta is pressing into a nearby level from below. The next close will tell us if buyers can keep control. Here is the map for the next close. Base case, the Nasdaq closes at or above 25,014.96. Microsoft closes between 398.01 and 466.32. Meta closes between 520.26 and 540.18, and the 10-year yield closes at or below 4.687. The index remains constructive, but stock selection still matters more than the AI label. Confirmation. Microsoft closes above 466.32, while Meta closes below 540.18. The Nasdaq closes above 25,014.96, and the yield stays at or below 4.687. The next level for Microsoft is 489.70. That would extend the premium for visible earnings conversion. Invalidation. Meta closes above 540.18, while Microsoft closes below 466.18. 14.32, or the Nasdaq closes below 25,014.96, while the yield closes above 4.687. A Microsoft closed below 398.01, while Meta holds above 520.26, would also break the current relationship. These are conditions, not targets. The daily close decides whether a level is accepted. An intraday touch is not enough. The sequence matters as well. A Microsoft push through its higher level means less if the Nasdaq is losing support and the yield is breaking higher. A Meta recovery means more if it holds through the close while its earnings gap is being absorbed. The map is designed to force those pieces into the same decision instead of treating every tick as a new story. The market wanted more from companies spending on AI. Meta showed strong revenue alongside costs that outran growth and far less free cash flow. The index rallied, the long yield stayed high, and the stocks went opposite ways. That is, the market drawing a line between spending and conversion. Watch Microsoft at 466.32 and Meta at 540.18. Then check the Nasdaq at 25,014.96 and the 10-year at 4.687. If the stock pair and the macro pair agree, the read is holding. If they split, I have to change the view. I am not making a price target or a trade call. The next close around 466.32 for Microsoft and 540.18 for Meta will test the mechanism. Subscribe if you want the same post-close map after the next session.